through what exactly liquidity mapping is. So it's basically using the higher time frame to identify where price is going to move to next. You have a sequence of highs and lows in the market, and it's first of all your job to identify where price is going to move to next in terms of this order flow. And the best way of doing that is by using these range boxes. To find these boxes, just head over to the taskbar on the left, open this up and go down to rectangle, and you can choose your rectangles by design. You can have a dashed line, a dotted line, a background, whichever suits you. And all you're going to do is drag from the very bottom of a 4-hour low, and you're going to map out the new 4-hour high. You can see here that it's printing higher highs and behind it higher lows. That's how we map liquidity on a bullish trend. Liquidity is resting below each low, and when we get a shift in market structure, it takes out those lows, and the confirmation that we've had a shift in trend is that we get second and third and fourth and so on new lows going forwards.
Time of day that you need to be looking at trades, and when I started trading this window, I became way more profitable and I actually spent way less time staring at the charts. Let me explain. Before I show you which time of day is better to trade, I want to show you the concept that works alongside it, which is session-based liquidity. So we have Asia session here, which has liquidity resting above the highs and liquidity resting below the lows. We came from a bullish move, so we're expecting price to continue, but now is not the right time to enter. Fast forward to London, which takes Asia lows and leaves behind highs of London, but this is still not the right time to enter the market. London continues to the London highs, which takes them out and liquidates them before moving down towards the London lows, which is the next liquidity pool. And now we enter 9:30 Eastern Standard Time or 2:30 British Standard Time, which is the window of opportunity we want to be trading. All we have left in terms of session-based liquidity are the New York highs and lows and the overall target, which is the Asia highs. So we're waiting for session-based liquidity before we get involved in a buy, which are the New York lows. And this is the 15-minute time frame. You could get involved here with a market order, stops below the low of New York, and take profit at the Asia highs, giving you a 2.5 RR trade.
Stopped out of your trades is likely because you're looking at liquidity all wrong. Understanding that there is liquidity resting above every trading session high and low is going to be a key turning point in your trading. Let me explain. We have the Asia session here, which will have buy-side liquidity resting above the highs and sell-side liquidity resting below the lows. So London is going to take out one of these, and if looking for a reversal, you can trade against the opposing side liquidity, so it takes out Asia lows, and you can target the Asia highs for London. Target met. Now you're waiting for New York session. You want to look back. Asia session has been qualified. That's happened. You're not looking for Asia session liquidity anymore. Do we have any session-based liquidity inside of London? Not in this case. So the lows are right down at the low, and if price reached that, would be in a bearish market. If we're now looking for continuations, not reversals, based on the higher time frame, we want to wait for a new low to develop. So we wait for New York to kick in. We now get that impulsive phase, and if we're looking for continuations, the liquidity is resting below the New York lows. Watch how price comes back to liquidate the lows, and then we see a reaction to the upside. There's your buy setup. Now the same occurs in a bear market, or if you're anticipating lower prices short term. We have the Asia lows and Asia highs. Asia lows get taken first, but you're not taking the trade because you're waiting for sells. You let London play out. Now it's taken Asia lows as anticipation for price to push higher into those Asia highs. You also have London highs as well, which get taken out first. You wait for price to take out New York highs, that retrace candle, and you're targeting the session-based lows of the day as your sell side liquidity. Let me know how this helps with your trading, and follow for weekly trading guides. When we get a market opening gap, which is basically large amounts of volume and orders that the broker feed cannot fulfill, price tends to come back and fill. And I'm just going to show you the last 3 or 4 market opening gaps. We have one here and it's filled. We have one here and it's filled. We have one here, and it's filled. Now, typically, within a few days or the same trading week, price will come back to fill that gap. So this one over here, which was the 23rd of March, 2025, was filled on the Friday. The others took between 1 and 2 days to fill. And then this one actually took a bit longer, it took 2 weeks, but it still came back to fill. And I see these market opening gaps the same or equal as a 4-hour high or low. So it's a form of liquidity. On US indices, when we get a market opening gap, which is basically large amounts of volume and orders that the broker feed cannot fulfill, price tends to come back and fill. And I'm just going to show you the last 3 or 4 market opening gaps. We have one here, and it's filled. We have one here, and it's filled. We have one here, and it's filled. Now, typically, within a few days or the same trading week, price will come back to fill that gap. So this one over here, which was the 23rd of March, 2025, was filled on the Friday. The others took between 1 and 2 days to fill. And then this one actually took a bit longer, it took 2 weeks, but it still came back to fill. And I see these market opening gaps the same or equal as a 4-hour high or low. So it's a form of liquidity. The Asia session the same way again, once you start using this TradingView indicator. Now, first of all, you need to download the sessions indicator, and then you need to open up the settings and go to your Asia session. For me is midnight to 6 a.m. That's British Standard Time. And where it says opening range, click to yes, scroll down to the opening range settings, and make sure the period in minutes is 60. Click OK, and this is your initial balance, which is the first opening range of the Asia session, the first hour of the trading day. Now, there's 2 things that we can look at to use this indicator to our advantage. The first one is the direction that price opens out of that range. So if we look at this example, price pushes higher outside of the initial balance, comes back and retests it before continuing. It even comes back pre-New York, mitigates the range again, takes liquidity, and you get another opportunity to go long. Here's another example on NQ where price does the opposite. It opens below with commitment, it comes back to retest the initial balance, and then for the remainder of the trading day, price pushes lower. And I'll show you 2 more examples on NQ. This time price does open below, but wicks and comes right back into the range again, and then commits 2 high highs inside London, giving more commitment to the upside. When price returns into the initial balance, it also takes internal range liquidity, and you see that move from London into New York highs. See, you're overcomplicating your trading when it comes to liquidity. Let's simplify. So all you need to know when trading the New York session is if price during London session continued without taking Asia session liquidity, that means that New York session is highly likely to come back and liquidate London before giving the main move of the New York trading session. Here's an example on NQ. Here we have Asia session, which consolidated before price continued into London session without taking any sell-side liquidity in Asia. Price then pre-New York came back to liquidate London lows before giving the move of the day. Let's have a look at the next day. Asia session, again, consolidated. London session also consolidated before pre-New York continuing to the upside, but London session did not liquidate anything in Asia. So what did price come back and do during New York? It liquidated London and then continued to the upside. Let's have a look at the next day. Asia session, more volume this time, but price continued inside London session to the upside without liquidating Asia. What did price do during New York? It came back for session-based liquidity, resting below London, and it gave the move of the day. Let's have a look at one more example, which is also the very next day. Asia session consolidated, price again pushed to the upside during London without taking Asia session liquidity. New York price came all the way back to take London lows before continuing to the upside. Now, for the best setups, you should always follow the 4-hour time frame. If the 4-hour is bearish, look for sells above a previous session high like London highs. And if the 4-hour is bullish like in the example shown, only look for buys below previous session lows. Give me a follow for more weekly trading videos.